Good morning, everyone, and welcome to NYSE TV Live. I'm Kristen Scholler here in the studio above the iconic trading floor. Well, as we round out what has been a busy and exciting week together, today does mark Ingram Micro's first full day of trade since returning to the public market. The leading IT solutions provider closed up 12% yesterday after raising $409 million, and it now trades under the ticker symbol INGM. Well, Ingram Micro is just the latest company to tap the capital markets as the major stock indexes sit right near record highs. Earlier this morning, we should note the New York Stock Exchange also announced that it does intend to extend weekday trading on NYSE Arca, that's its fully electronic exchange, to 22 hours a day. Extended trading is subject to regulatory approval, and the NYSE will seek support for it from the U.S. Securities Information Processors. Well, I mentioned we've got a lot going on this week and certainly on this Friday as well, so let's take a look at what is on tap in today's show. An IPO look with the NYSE's vice chair is on tap, and consumer sentiment as well. Let's queue up where we need to be here. The New York Stock Exchange's vice chair and global head of capital markets, Michael Harris, is going to join me live. We'll talk about Ingram Micro's return and what is in the pipeline. Plus, the head of consumer sentiment data at 10 a.m. Eastern, a markets expert, will join me to talk about how the latest economic reads are impacting stocks. And Puerto Rican financial holding company OFG will join as it celebrates its 30th listing anniversary. The company's CEO will talk to us from the floor. Well, with interest rates projected to come down as the U.S. economy undergoes a soft landing, it's a ripe time to tap the capital markets. That's exactly what Ingram Micro did yesterday. And so joining me now with more is Michael Harris. He's vice chair and global head of capital markets here at the New York Stock Exchange. Michael, thanks for joining.
Thanks for having me.
Great to have you as we wrap up the week and saw Ingram close up 12% in its return to the capital markets yesterday. What does this return mean?
Yeah, well, look, busy week, obviously. Thanks for having me. I think it means a couple things. For, when we look at the IPO markets, there are a couple things that we look at as being the signs of a successful deal. Oversubscription is one. Being able to price a full-size deal within the marketed range, and also, more importantly, just how it trades in the aftermarket. And if you look at the success of Ingram Micro, they had a deal that was 12 times oversubscribed, a lot of good long-only interest that came into the order book, a transaction that also ended up pricing a full-size transaction close to the top of the range, and more importantly, in the aftermarket, traded up, as you mentioned earlier at the top of the program, ended up the day up 12%. So all those boxes are checked. A great debut in the public markets, another great technology name also to talk about as well. So as you look at that as a sign of a successful transaction, they really do check all the boxes.
We see stocks set to open fractionally higher today. Today will be Ingram Micro's first full day of trade with a 9:30 a.m. open. What about the market conditions right now make it an attractive time to go public?
Well, as you mentioned earlier, market conditions in the secondary market at an all-time high, so valuations look fantastic. I think there's a much healthier outlook for the overall interest rate picture as well as for the inflation picture, so the macro conditions look a lot more favorable. And then I think there's also the dynamic of, from a demand standpoint, there's a lot of pent-up demand to buy deals. There haven't been as many transactions in the marketplace as we probably like to see, and what we are seeing in the market is every deal that's coming to the marketplace that has great dynamics attached to it, there's a lot of oversubscription levels and also healthy buy-through in the aftermarket.
Does Ingram's deal portend what else might be in the pipeline?
We think so. When we look at our own pipeline, it is very full. Now, a lot of that is based on issuers that have been waiting for the right market window to open up for some time. Issuers that have gone back all the way to 2022, for instance, that have been in the filing process. But I think if you look at this year relative to other years, one thing that's interesting is there haven't been as many technology issuers. So there's only been about 7 companies that have come to the public markets that have been based in kind of the broader TMT space. A typical market market generally has somewhere between 50 to 60% of issuers coming from what I generally characterize as being the growth sectors, healthcare, TMT. This has been a little bit lighter. And so as we look at the pipeline for next year, it looks much more normalized, where we're going to see likely increased issuance, but a lot of issuers coming from more of those traditional growth sectors, including technology.
I saw yesterday that BMO Capital Markets estimated that we could see $50 billion in U.S. IPOs next year. Would you agree with that?
I think that's pretty accurate. You know, if you look at a typical IPO year, it's generally between $40 to $60 billion, and that's kind of right in the sweet spot. And as we look at kind of the years 2020 to 2021, a lot of what the newspapers have been writing about, that's a little bit of an aberration. So I think kind of going back to a more normalized period of issuance seems right. And when we look at our own pipeline, that really ties into what we see in terms of a normal market environment.
It's interesting to hear from you that growth seems to be the name of the game for companies that are in the pipeline. Is it growth over profitability now that you think investors are prioritizing when it comes to these deals?
I think it's a combination. It's not necessarily growth at all costs. I think investors are focused on scalable growth, a pathway to profitability. So don't necessarily need to be profitable today, but there needs to be an actual sight line to profitability in the future. But there's also a focus on leadership within your given category, and mostly a durable business model. And so there is much more of a kind of a back to basics approach that investors are taking in terms of the investor engagement process. And they are looking at businesses that they are looking to have scalable stance today, but more importantly, just durability going forward tomorrow.
I mentioned earlier that you are the global head of capital markets here at the stock exchange. What are we seeing on a global scale, on an international level when it comes to tapping the pipeline?
Very busy. You know, if you look at our listed community, you know, more than a third of our companies are domiciled outside of the U.S. We are seeing the pipeline of activity pick up. A lot of the conversations we're having are from companies that are not in the U.S. but are in countries like Southeast Asia, Canada, Mexico. There are a few names that are likely going to go public over the course of the next 6 months or so. They're coming from those areas, but also a lot of conversations in Europe as well. So it's pretty diversified. Makes me travel quite a bit,
yes.
But at the same time, you know, our team is very active with a number of companies across all regions, really.
For those international companies, what makes the U.S. capital markets attractive to these companies to list their shares?
Yeah, I think it's a combination of things, but at the end of the day, it's really the U.S. has the most sophisticated investor base and also the deepest pool of capital. And so that liquidity is a draw for issuers from around the world. Ultimately, if you're looking to raise capital at the best valuation with the most sophisticated group of investors, increasingly it is the U.S. Europe is a much more fragmented market. The UK has had a combination of challenges from a listings perspective, from a liquidity perspective, and in the same thing pertains to whether it's Hong Kong or also other markets in Asia. And the US is really the one market that has continued to have a very diverse retail base, very, very strong institutional base, and also very strong liquidity, especially at the auctions as well.
Michael Harris, great to get your take. Thank you so much for joining me in studio. Michael, of course, is the global head of capital markets here at the stock exchange and the vice chair. Well, stay with us because up next we'll take a look at the tourism industry in Puerto Rico as Puerto Rican bank OFG celebrates today's opening bell.
Now, obviously your focus is your 300 PF chains that you have around the world. But talk to me more about this new pagoda concept.
The type of service and food that we serve, which is made from scratch, high quality ingredients, great hospitality, great ambience, that can be used in more use cases, more need states, more occasions, to more people more frequently. So the light bulb moment, if there's one, is, wait a second, we can do a great job for you on a lunch during the week. And, and it can be very fast, it can be very affordable, it can be very, very abundant, and of course, delicious. We just have to adapt the way we do things, steps of service, abundance, price points, to be able to serve you this way.
Now, while you're remaining so agile with this ever-changing landscape in the food and beverage sector, how do you sustain your authenticity?
The brand has to know, what they stand for, right? In our case, is every day is a celebration. We want to elevate every occasion and make it special to people, right? So if it's a day-to-day lunch, we created a concept here in the US that we call express lunch in our bistros, which is a lunch in 20 minutes or lunch is on us. It's the same ingredients, same kitchen, same steps of service, just an individual bowl because that's the occasion there. So understand who the brand is, what the brand stands for, and what the consumer, the customer, in our case, the guests, the way they want to live their lives, and adapt ourselves to serve you this way. I believe that's where we found a lot of success, and we continue to do that moving forward.
How do you think your new Pagoda concept will impact the broader food and beverage sector?
We believe we can play in a segment which is fast casual, where it's more a customizable, super fast, abundant experience that's very affordable, that we can put people through the line.
Welcome back to NYSE TV Live. I'm Kristen Scholler here in studio. Well, as Puerto Rican bank OFG celebrates its 30th listing anniversary here at the stock exchange, we want to take a look at how Puerto Rico's tourism economy is faring. And so for more, I want to bring in my colleague, Trinity Chavez. Trinity, good morning.
Good morning, Kristen. That's right. So we are here live on the trading floor right now, but I do want to talk about how travel is once again picking up during the holiday season as it's quickly approaching. So we're going to do a deep dive into this destination in Puerto Rico that's been a favorite for travelers for many years. Puerto Rico, of course. So joining us more to discuss the state of Puerto Rico's tourism, the impact of ongoing recovery efforts from past hurricanes, and what travelers should know is Brian Kelly. He is the founder of the Point Sky and a trusted voice in the travel industry. Brian, thanks for joining us.
Thanks for having me.
So what would you say makes Puerto Rico a standout, a must-see destination for so many travelers, especially for those looking for a Caribbean getaway?
Yeah, Puerto Rico has something for everyone. I'm personally a luxury traveler, and what I love is that you can fly nonstop from the US. JetBlue just announced they now fly daily with their lie flat Mint service. So you can fly in a lie flat seat in business class, and you don't need a passport to go. So whether you're a family, luxury traveler, there's so much adventure to do on the island with bioluminescent bays. You really have something for everyone, and the convenience and ease cannot be underestimated.
And Puerto Rico also has so much diversity, from a vibrant city life in San Juan to the natural beauty of El Yanque, and so many remote beaches. So what are some of your favorite spots that really showcase the island's range of attractions?
Yeah, so not only are there beautiful beaches, but there's a lot of cultural heritage. There's an amazing food scene. And Puerto Rico is what you want it to be. If you want to go to the casino and have a night out dancing in Old San Juan, you can do that. You can lounge by the pool, and it's really safe as well. So I think for Americans looking for a sure bet of a vacation, you want to go out a little bit, but you want to be able to relax. And also for LGBTQ people, Puerto Rico, in my opinion, is the safest and most inclusive island in the Caribbean, which does matter for a lot of people.
And I have to say, I do love how Puerto Rico has been just so resilient, especially from past hurricanes that we've seen. I think the last one that was very devastating, not saying that they all aren't, but Hurricane Maria, there was just reports out that the region is still recovering from that hurricane. However, the community has really come together, and despite this, people still see Puerto Rico as an ideal travel destination. Can you talk to me more about that?
Yeah, absolutely. I went to Puerto Rico 90 days after Hurricane Maria, and of course the news reports were all about the devastation, but on the ground, Puerto Ricans are resilient. Tourism was open, just weeks after Maria, and tourism is what has driven the recovery on that island. So when you think about giving your tourism dollars, giving it to Puerto Rico, helping them rebuild that infrastructure, supporting those local businesses. And I will say the silver lining of the destruction that happened to so many hotels or that they had complete renovations. So many hotels across the island are now beautifully redone. And like I said, you get that really upscale experience. There's so many new hotels that have opened. So if you haven't given Puerto Rico a try in a while, I highly recommend it. I'll be going back there this coming fall.
But also tourism and hospitality, the industry there is hugely important to the broader economy as it continues to recover from hurricane seasons.
Absolutely. Yeah, like I said, supporting local businesses is an act of good in itself. So yes, you can go out dancing in Old San Juan, but you're supporting locals who can then support their families. That those tax dollars go directly into schools. So I always tell people, if you want to help out an island, it is now fully safe to go there. The cell networks are back up and running. You're not going to experience power outages, but you just visiting the island is an act of good, in my opinion, in helping that recovery.
And I do have to point out that what I love about Puerto Rico personally is the fact that you don't necessarily need a passport. I mean, it's within the U.S., it's easy to get to. And there's so many amazing destinations in Puerto Rico and all the amazing flavors.
Absolutely. I highly recommend. So, San Juan and the surrounding beaches. I love Dorado Beach is stunning, Bahia Beach. But also on the west coast of the island, you can go surfing. And then there's also, little islands off the coast, and it's completely safe to travel around Puerto Rico. So go get a flavor of the island. Don't just go to San Juan.
And last question here, because we have about 60 seconds left, but for travelers interested in ecotourism and sustainable travel, how does Puerto Rico support these initiatives, and what are some eco-friendly activities to explore?
Absolutely. Well, you mentioned El Yunque National Rainforest is absolutely beautiful. That did get hit by Maria, but it is we are back and in business. But also, there are bioluminescent bays. I did that on one of my visits several years ago, and it's incredible. At night, you can go out, take your family in a kayak on a bay, and it glows blue from the organisms in the water. And, the island has committed to, sustainable tourism. So the numbers are up through the roof, but you're not going to feel the overcrowding or, like you see in a lot of Caribbean ports where everything is concentrated in this one city center. Puerto Rico, the tourism activity is spread across the island. So I cannot recommend, again, go out and explore the island. There's so much to see.
Well, I definitely have to say after this interview, I definitely want to get on a plane and go to Puerto Rico. So maybe it'll make my Christmas wish list this year. But as always, Brian, thank you so much for joining us. It was a pleasure having you on the show this morning.
Thanks for having me. Safe travels.
Now, I do want to send things back up to my colleague, Kristen Scholler, for more.
To hear from Brian Kelly, of course, and we will be checking in with OFG, that Puerto Rican bank, after the opening bell. Of course, there's the time. Well, stay with us, because up next, we're going to talk about personal finance, a great topic on a Friday. I'll be joined by wealth advisor Larry Sprung to get his insight on how we can take advantage of this October theory. Stay with us.
I'm Isabella Bizone with Fixed Income in Focus. Today, I'm pleased to have with me Carol Schleif, Chief Investment Officer at BMO Family Office. So, Carol, providing wealth management services to high net worth clients demands diversity across instruments. How are you and your clients using fixed income products, especially in this higher for longer rates environment?
We've always used a variety of fixed income products in the public and the private markets, from separately managed accounts managed internally or managed with outside managers that we use. We use mutual funds, ETFs. We can do private cap or private structured credit, and as well as a variety of structured notes. So we use it a lot, and one of the advantages we have to the current higher rate environment is that it allows us, if clients need money coming in the near term, it allows them to be able to sit in cash, which is something we haven't been able to do for a very long time. So there's a variety of ways to play it, especially with higher yields across most of the instruments we're using.
Absolutely. So speaking of a high rates environment, we've seen substantial market commentary during the rise of interest rates and inflation that challenges the traditional 60-40 equity to fixed income allocation. So in your role, how do you determine the appropriate allocation strategy, and have you seen any shifts in recent years?
Well, the interesting thing is that there was a lot of calls for the death of the 60-40 portfolio back in 2022, when both stocks and bonds were down so much. But it always starts with the individual client and what they're looking to do. And it can be different even within different generations of the family. Anything they're going to need in the next couple of years should not be in very long-term investments, should be shorter term. And as we were talking about, you have an ability to get paid to do that, which you haven't had for 10 to 15 years. So it's very bespoke per client, but we never...
Welcome back to NYSE TV Live. I'm Kristen Scholler here in studio. Well, have you heard of October Theory? It's a trend taking social media by storm. The theory goes that the fall is actually the best time to set goals, maybe contrary to typical goal-setting time at the new year. Well, we believe that putting your personal finances front and center is a good idea. And because of that, I want to bring in personal finance expert and wealth advisor, Larry Sprung of Milton Financial. Larry, it's great to see you this morning. It's been a while since we've been able to catch up, but I want to hear from you more about the purpose of October Theory that's currently playing out on social media.
Yeah, thank you, Kristen, for having me. I'm excited to be here with you once again. And October Theory is certainly taking the internet by storm. And I think it's a great idea because many times we start planning in January, and by the time we get started working on these goals, we're already well into the year. So starting to plan that out in October is amazing, because then you could start off January 1 on the right foot and get things moving quickly.
Okay, I like October Theory officially. That's my takeaway. Larry, with your take there, what steps should viewers take at this particular point in the year to set themselves up for success?
The best thing is to take a look. Number one, be grateful for what you have and where you are, and take a look at where you and what you accomplished this year thus far, and take stock in that. And then start looking out to what your goals and objectives are for the new year, and start mapping that out month by month, what you want to achieve, and then set up tracking mechanisms to make sure that you're staying on track with those goals.
Yeah, I think I heard a phrase once, what is measured is what matters and what can actually change. So I like that input. For some of our viewers, healthcare, open enrollment, time is here or it is on the near horizon. What are the best ways to approach that and consider your options?
I think what you should not do is just take for stock that what you had in place for this year is what you should automatically roll into next year, because that's a passive approach that a lot of people take. And you really want to see, were the benefits that you enrolled in and paid for this year really beneficial for you and your family? If they were, then you can take that approach. If not, then you have to do a little research and take a look at what benefits or what packages might be better for you and your family, and make those adjustments for your benefits. Same thing with your retirement accounts as well. If you undersaved this year and you're off your goals, make sure that you increase those savings goals as well.
And probably a good reminder for our viewers as well, Larry, correct me if I'm wrong, but each year the amount that you can contribute to your retirement usually goes up, right?
Absolutely, and that's something that a lot of people fail to take stock in and evaluate, because we've seen families that come to us and still think that their maximum for a 401k is in the $14,000 or $15,000 range, because that's what it was many years ago, and it's $23,000 this year, and we'll be hearing an announcement soon about what that's going to be going up to for 2025.
Look, the holidays are right around the corner. How do you recommend people approach holiday shopping this year?
I think what you have to do is take a look and budget for it, right? Just don't go into it with an open-ended checkbook in terms of, you're going to go in and buy what you want to buy for the family. Set a budget and stick to it and plan it out, how much you intend or want to spend on family, friends, and business associates, and try to stick to it as best you can, because once you get in the store and you get wrapped up in that environment, it's very easy to overspend.
So to that end, Larry, certainly a lot of people are shopping online these days as well. If you see a deal, you might be so inclined to take advantage of it. Maybe FOMO is at play. You don't want to miss out, have that fear of missing out. What's the best way to approach deals that might come into your feed or your inbox?
Well, not every deal is created equal. Just because Amazon or whoever the retailer is says it's a deal doesn't mean it's a deal. Check it out. Take a look. Google it. Take a look at where and what it sells for with other providers, and maybe you can find a better pricing. Just because it's labeled a deal does not mean that that is so. And do your research. You can save tens, if not hundreds of dollars that way.
We were talking about investing earlier, and of course, investing is part of savings. But I'm curious for our viewers, how would you recommend that they look at perhaps a high yield savings account in this environment, Larry, versus making investments in the stock market?
I think you have to evaluate what this money that you would potentially be putting away in a high yield savings account or an investment is going to be used for, or what its expected intentions are, right? The longer the term you have in terms of not needing access to that money, then that makes the case to invest. If it's something that you're going to need in the short term for a home project, a wedding, school, something of that nature, then I would highly suggest that high yield savings account over an investment. You know, if you're going to have it in there for the next 5 or 10 years, then I think that makes the case to invest those funds rather than a high yield savings.
On this show, we talk a lot about the Federal Reserve, about interest rates or borrowing costs, and I'd like to hear from you, Larry, why viewers, Americans, should be following that, how those borrowing costs and the actual rates can impact their finances.
Yeah, I mean, what the Fed is going to do, and what they have done, you know, lowering rates last month, and then there's an expectation that we see rates continue to move down, it is vital to most of the things we do. If you're looking to buy a house, it could impact that mortgage rate. If you have credit card debt, it will impact that interest. And, you know, anything that you're looking to do that incurs borrowing is affected by the Fed and those interest rates that the banks are going to be putting out. So pay attention, and maybe you can hold off on a certain purchase that you might need to incur some debt on and wait for those lower rates. If not, just be mindful that you may want to refinance at some point that debt.
Larry Sprung, founder and wealth advisor at Milton Financial. Larry, it's great to see you. Thank you for joining.
Thank you.
All right, well, we are just minutes away from the opening bell, and today's celebration will be rung by OFG Bancorp CEO José Rafael Fernández. It's a 60-year-old company celebrating its 30th year listed here at the New York Stock Exchange. And since taking on the CEO role in 2004, Rafael has overseen a number of changes and deals, including transitioning from the old company name, Oriental Financial Group, to the current moniker OFG in 2013. Some of the notable acquisitions under his leadership include a $550 million cash deal in 2019 for the purchase of all operations of Scotiabank operations within Puerto Rico and the United States Virgin Islands and Territories. Well, the year prior, OFG, still called Oriental Financial Group at the time, acquired its former competitor, Eurobank. And in addition to offering banking and lending services for retail and commercial businesses, OFG offers wealth management products and lending and technology services primarily in the U.S. and the U.S. Virgin Islands. Well, just last year, Rafael was named Community Banker of the Year by American Banker. That's a leading financial and banking trade publication. This company is based in San Juan, Puerto Rico, and 2023 data shows it had assets of just over $10 billion with about 2,200 employees. This is going to trade. It does trade under the ticker symbol OFG. You see the signage behind me, orange and white, to celebrate this 30-year listing anniversary. All right, we are just moments away from the opening bell, and I do believe my colleague Trinity Chavez is on the floor. Trinity, what's the pulse down there at the stock exchange?
Well, let's take a look, Kristen. Again, we're active on the trading floor as we're looking right now at OFG. They are on the bell podium as we get ready right now to do the opening bell and open up the U.S. equity markets. We have the CEO up there. I'll be speaking with him just a little bit later on in the show. But again, friends, supporters, colleagues of OFG are down here on the trading floor right in front of CNBC set, getting ready to open up the U.S. equity markets. And we're about 30 seconds out right now. And again, the crowd is going to erupt with excitement as we celebrate them here today at the New York Stock Exchange, Kristen. So I think that we should turn it over to that opening bell.
Trinity Chavez down there on the floor. That's right, Trinity. Let's take a look as OFG celebrates its 30th listing anniversary here at the Stock Exchange. And we get off to the races with stocks set to open fractionally higher. We are officially off to the races. Trading open here at the New York Stock Exchange. Stocks opening higher in today's session on Friday. And OFG, as you see there, celebrating the opening bell. Its CEO is going to join my colleague Trinity Chavez down there on the floor in just a few moments. But of course, as equity markets are now open for trade, I do want to bring in Mitch Rochelle, founding partner at Macro Trend Advisors, to talk more about what we are seeing here in the market. Mitch, good morning.
Good morning, Kristen.
It's good to see you. So we've seen stocks take a pause this week. Could end on a positive note if these fractional gains hold until the close today. What is behind this breather that we've seen the past few days in the markets?
I think anxiety, it's a multi-factor anxiety. First, we saw bonds sell off and yields go up. Many of the big tech names are interest rate sensitive in terms of the market perceiving that they're interest rate sensitive. I don't see the bond yield rise as being troubling. I actually think it's quite healthy, but I think equity traders thought that it was troubling. But, you know, we have an election, which isn't a newsflash to anyone, coming up. And I think that there's a lot of anxiety going into that, not knowing what the rest of the year is going to be like, not knowing what the next 4 years could be like. And it just has investors taking a pause. You know, earnings season isn't so bad. So it, you know, doesn't really sync with the earnings coming out strong. So I think we'll see.
Well, we've seen, Mitch, yields rise despite the Fed's previous forecast of cutting rates ahead. Because of this and the incoming data and earnings that we've seen so far, do you think the Fed is going to need to temper its rate cutting path?
Well, I think it's going to end up being the jobs report that comes out a week from today that's going to inform the Fed in terms of how they should proceed in their November meeting, you know, which is after Election Day, which is where they would announce the next cut if there is one. You know, what's interesting is, you know, with yields rising, we have the 30-year Treasury, you know, 4.40, 4.5, you know, sort of, you know, somewhere between 4.25 and 4.5. And we have the short end of the curve, the very shortest end of the curve, at the same yield. So we still have that sort of inversion, but the rest of the Treasury curve is steepening, which signals that the bond market and bond investors think that the economy is improving. So we'll see if the Fed has the same view. But I think that the employment picture is probably the thing that the Fed's going to be focused on the most.
Do you anticipate that this jobs report that you just referenced, Mitch, could be an outlier, though, and skewed because we've seen strikes and we've seen extreme weather between the hurricanes in the month of October?
I think it becomes more of a political weapon for the candidates than it is something that the Fed is going to, you know, change its mind on. I wouldn't be surprised if we didn't see it, you know, as a 5-digit number. Well, you're right. You have the Boeing strike. You have, you know, the short-lived longshoreman strike. We had, you know, 2 natural disasters which displaced workers. And then you have this this pattern of revisions that we're in. So we could see a very disappointing number, which obviously is going to be fodder for the Trump campaign, you know, in the final days. But the Fed's going to look at it more deeply. But if the Fed sees something troubling ahead in the labor markets, because what I'm hearing and seeing in the labor markets is that companies are equally anxious about the future. And the ability to continue earnings at the trajectory that they've been at. And they're beginning to control costs, especially in white-collar jobs. So if we look at the labor picture very, very closely and see that the only thing that's creating jobs is healthcare and government, and, you know, white-collar jobs and high-wage hourly jobs aren't continuing to grow, that could give the Fed a little bit of pause, but I don't think they're going to, you know, depart at this point from their plan to cut rates.
And of course, we'll see how the consumer is feeling with that consumer sentiment data out at 10 a.m. Eastern this morning. Mitch Rochelle, founding partner at Macro Trend Advisors. Mitch, thank you so much.
You bet. Thanks for having me.
Well, stay with us because up next, the CEO of OFG is going to join us down there on the floor after celebrating the opening bell.
Hello and welcome to today's edition of The Exchange, brought to you by the New York Stock Exchange. I am live on the floor with my friend Stephen Lee, founding partner and portfolio manager at Logan Capital. Stephen, thanks for stopping by.
Thanks for having us.
So I want to talk about your ETF. It's LCLG, easy to remember. It's the Logan Capital Broad Innovative Growth ETF. Tell us a little bit about the strategy behind this ETF.
Yeah, it's a strategy my team and I have been running since the 1990s. So we've been through a lot of different markets together, and we really focus on doing three things. We spend a lot of time looking at the economy. What are the trends? We expanding, contracting. Whose customers have a higher propensity to buy? We do a lot of quantitative work based on earnings leadership, which has allowed us to find names before everyone's talking about them. And we do technical analysis, which gives us the perspective to be long-term investors and capture gains over the long term.
So I want to talk a little bit about the FANG stocks, the Magnificent Seven. Like, we've got these different combinations that are out there, right? When you look at those, how have they affected your portfolio construction, the way you think about risk management?
You know, they've been a great source of opportunity for us because, as I mentioned earlier, we tend to find names a little earlier than our peers, and we have some very good disciplines about risk management and position sizing. So very often we'll find that those stocks have been, as they appreciate and become big parts of the benchmark, we can sell into that strength and then use our earnings leadership work to find the next generation names. So often when the FANG stocks get to be a big part of the benchmark, our risk reduction has us taking profits and planting seeds for the future.
So let's talk about current investments, recent investments. You know, are there certain names in the portfolio? You know, where has performance been coming from for your ETF?
Sure. Well, it's interesting. Obviously, we've had some of those big tech names that everyone knows. As I mentioned, they've gotten to be big parts of the portfolio. So then we've trimmed those, bought next generation leaders. So companies like an Arista Networks. In the consumer, we've been a little more constructive on the consumer than some.
Puedo devolverle lo que ha hecho por mí.
Puedo ahorrar para darle a mi familia un futuro brillante.
Yo puedo convertir mi nueva casa en un hogar.
Y hacer que mi negocio siga creciendo. ¿Y estás listo para decir sí puedo?
Con Oriental estás más que listo.
Welcome back to NYSE TV Live. I'm Trinity Chavez, and we again are on the trading floor of the New York Stock Exchange, where we are going to talk about the incredible growth and the story of OFG and its subsidiary Oriental Bank, from their rise to the market share to Puerto Rico's impressive recovery since Hurricane Maria. We're talking about all of this and so much more with OFG's CEO, José Rafael Fernández. Good morning, José.
Good morning. Great to be here.
It's great to have you. I mean, you kicked off the markets for today, opening up the global markets. How are you feeling?
Exciting time. We're really thankful and grateful to be here and celebrating our 30th year at the NYSE, as well as our 60th year anniversary.
And you know, I do want to talk to you about OFG, the name. Yep. Talk to me about the name, the story behind it, and your motivation.
60 years ago, we were founded in the eastern part of Puerto Rico. So we were founded in Humacao, Puerto Rico, which is on the eastern side, and that's why our main subsidiary is called Oriental Bank, which is because it was founded in the eastern part of Puerto Rico.
And I do want to talk about your company's growth. You have had a significant growth in recent years. You've grown from number 9 in market share to number 3 overall, and 1 and 2 of your most products and services that you offer. Talk to me about that. What do you attribute this success to, and how do you expect to continue driving this momentum forward?
So it's been a great ride for us. We have done 3 acquisitions throughout the last 20 years as I've been a CEO. It's a tribute to our team. It's a tribute to our great ability to work together, and those 3 acquisitions were part of the transition that we made from 2010 to today, as well as growing after Hurricane Maria and the COVID, where we did organically grow our assets. And today we're an $11.5 billion financial holding company in Puerto Rico, and really proud of our growth and our stock performance.
I love that. And, you know, I do want to go back to your point earlier about Hurricane Maria. You know, there are still reports that are suggesting that the infrastructure is still recovering in Puerto Rico from Hurricane Maria. So can you talk to me about how your team, how your community has remained resilient, and how you as a business continue to thrive even in disparaging circumstances?
So Puerto Rico's been recovering since the Hurricane Maria, and the reconstruction is going on. It's ongoing. It's a significant amount of reconstruction and recovery, so it's going to take some time. But we have made a lot of progress, and that's being seen today in today's economy. Puerto Rico's economy is actually thriving. It's having economic growth. Unemployment is at all-time lows. So we're really at a very good spot for Puerto Rico's economy. However, there's still things to be made, things to be done, like the Electric Power Authority needs to be restructured, and we need to rebuild it. And that's in process. It's going to take 5 or 6 years. But as you know, electricity is key for businesses. So it's important that the government in Puerto Rico and in the U.S. continue to focus there.
Incredible. Well, thank you so much, Jose. Again, congratulations on this huge milestone, and we wish you continued success.
Thank you very much. Great to be here again, and thank you for having me here.
Take care.
Take care.
Now we're going to take a look at a quick client video, and we'll join you on the other side of that break.
¿Alguna vez has notado que todas las celebraciones tienen algo en común? Todas comenzaron con alguien que tuvo el coraje de decir sí puedo.
Puedo devolverle lo que ha hecho por mí.
Puedo ahorrar para darle a mi familia un futuro brillante.
Yo puedo convertir mi nueva casa en un hogar.
Yo puedo convertir un final en un nuevo comienzo. Y hacer que mi negocio siga creciendo. ¿Y estás listo para decir sí puedo?
Con Oriental, estás más que listo.
Now, Matt, talk about the specialty services broadly and how Evernorth serves the specialty market.
Absolutely. Evernorth is a leader in the specialty space. A little bit of context. Specialty drugs are those that are used to treat patients with complex conditions like rheumatoid arthritis, MS, or even cancer. Very often these are infused or injectable medications. They'll typically have strict storage and handling requirements. We have some drugs in specialty that need to be infused into a patient 24/7. Even a lapse in treatment of just a few minutes can lead to serious medical consequences. The medications can also be quite costly. There are some specialty drugs that can cost hundreds of thousands or even millions of dollars per patient. And we expect demand for these specialty drugs to increase significantly over the next several years, and that's fueled by a wave of complex drug innovation. I'll give you one data point on that. Last year, over 70% of the drugs that were approved by the FDA were specialty drugs. Now, in the specialty space, we have several different ways at Evernorth that we serve the market. We have our leading specialty pharmacy, Accredo, where we treat over 1 million patients with over 7 million specialty prescriptions annually. We have our specialty distributor, CuraScript, where we serve over 12,000 healthcare providers. And then we have a collaboration with a company called CarePath RX that serves over 700 hospitals, health systems, and providers and provides specialty pharmacy and infusion services on their behalf.
Now, Matt, we know that specialty drugs are expensive for both the healthcare system and for patients. What is Evernorth doing to increase access and affordability to these life-saving medications?
There's a lot that we do, and one example that I would highlight is our focus on the adoption of
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. And we at NYSE TV are gearing up for one of the biggest events in the financial technology world. Money 2020 is set to take place in Las Vegas next week. And it's not just any old conference. It's truly the heart of innovation in the fintech space. And so with that, I want to bring in my colleague, Trinity Chavez, on the floor with more, who's going to be covering this event live for us on NYSE TV. Trinity,
Hey, Kristen, that's right. So this event's going to be kicking off in my hometown of Las Vegas, Nevada on October 27th through the 30th. And again, the NYSE will be there on the ground. We're going to be covering it all. We'll be speaking to some of the biggest industry leaders, disruptors, and visionaries who will be coming together to share insights, foster connections, and explore the future of money. But it's not just for industry insiders, Kristen. It directly impacts your financial life, my financial life, as well as the everyday consumer. So they might be watching this and asking why they should care about this FinTech conference, right? So why it matters to their money is that it's not just for industry insiders. What happens there is that it impacts their financial life every single day through this conference, Money 2020. It's going to showcase the groundbreaking innovations in financial services that could change how people handle their money. So think about all those digital wallets that you use, or maybe mobile payment applications that make transactions easier. Well, we're also going to be seeing more developments in the cryptocurrency solution space. And these technologies are designed to enhance convenience and security, making it easy for you, for me, and for everyone really to manage their finances easily in our digital world. Kristen?
I want to hear more about the technology itself. I know Money 2020 is focused on how companies can really improve their overall experience. What's going to be in store on that front?
Yeah, so they're going to be discussing how to better serve customers like you and I, which means that they can expect improvements in personalized banking options and even better customer support. And this is all about ensuring that the customer has greater access to the financial resources that they need. And among the topics that are going to be covered is education. That's also another huge theme this year. And so we can expect a lot of insights and discussions on financial literacy and new financial products. So this is our chance to learn about how we can navigate our finances more efficiently and effectively every single day. So to help everyone make more smarter choices, so to speak, whether you're saving for big purchases or investing for our future.
Trinity, what are some of the other hot topics that this conference is going to cover, especially when it comes to regulation, right? That obviously is a key part of the business world.
Yeah, absolutely. And so industry leaders that we're going to be speaking to, they're going to dive into how these changes and regulations can really affect us. And everything from fees to privacies and protections, knowing about all of these changes can really empower you and I and everybody else really to make informed decisions about money. Lastly, the networking opportunities at Money 2020 are very beneficial. When startups collaborate like this with other established companies, we often see sort of like a birth of innovative solutions designed specifically with consumers in mind. So this is where new ideas and partnerships can really lead the way to tools that enhance the overall banking experience. So again, as we gear up for Money 2020, remember that this is just more than an industry event. It's also a platform for real change that can lead to better financial tools, services, and education for all of us.
Trinity, I can't wait to see your coverage there. Again, Monday through Wednesday next week, we will be bringing it to our viewers on NYSE TV Live. And Trinity, I know you have another interview coming up about this very topic. So let's take a live look at the trading floor here as we await to hear from one of our head of financial sponsor coverage, who I know is going to be joining Trinity on the floor. Can we take a live look at the floor of the stock exchange to see how things are looking? Fractional gains here at the open. The Dow up 0.4%, the S&P up about 0.7%. Of course, it's really just been a week of consolidation for the major indexes. And that comes after we had seen the S&P and the Dow, in fact, rise for 6 straight weeks, their best weekly winning streak of the year. And so stocks right near record highs, earnings, the election, both of these factors continue to be in focus. And for now, I want to bring my colleague Trinity Chavez back in to speak with the NYSE head of financial sponsor coverage. Trinity.
So Tad Natchiff right now, he is joining me now. He is the head of financial sponsor coverage here at the New York Stock Exchange. And he's also going to be joining me. You're also going to be joining me on the ground at Money 2020 in Las Vegas next week. And so I'm really excited about that, Tad. Is there anything you're specifically excited about or any specific trends that you're looking out for this time around?
Well, certainly there's a few things to look for, and there's always a lot at Money 2020. And we're going to eventually get there. So let me just start with AI. Certainly AI is going to be used on a number of different ways at Money 2020. It'll be talked about in terms of handling financial fraud, handling customer accounts, making investments more efficient. But in terms of the impact in the financial sponsor world where I live, I see a lot of sponsors investing in some of the areas that are going to power AI, things like data centers, infrastructure, power, alternative power, and things like that.
And we're going to be speaking to a lot of the industry leaders when it comes to the private side on the private sector, but we're also going to be speaking to a lot of equity investors. So talk to me about why the presence for the NYSE there on the ground is so significant from a capital market standpoint.
Definitely. Well, the way I look at it, you've got the big financial institutions, the banks, the investment banks, the brokers. They're all listed here at the NYSE. They have the customers, the connectivity to those customers, and then the fintechs have all the applications that go on top of that. So these fintech companies, whether they're applications to let you watch your credit score, handle your budgeting, find different ways to invest, tie all your accounts together, those will all work with all these various financial institutions. Those financial institutions are all listed here at the NYSE. So we're a logical partner to have all these fintechs at the community at the NYSE.
Now, one major theme this year is obviously financial inclusivity. Talk to me more specifically about this and how you see it benefiting the overall fintech sector.
Definitely. One area where we've seen more financial inclusivity has been in the area of expanded credit. Things like buy now, pay later. These buy now, pay later are allowing those with not perfect credit to get more access to the financial system and be able to buy the goods and services that they need. I'll draw a little bit of a parallel, not a direct parallel, but if you look at financial sponsors, they are the big alternative credit providers. Alternative credit, private credit has exploded in the financial sponsor world, big growth area, and I don't think that's going to stop anytime soon.
A lot of important takeaways, and I'm excited to join you on the ground next week. Tad, thank you for joining us.
Thank you.
Now we have more in store when we come back in just a few minutes, but stay tuned. We have more on the other side.
¿Alguna vez has notado que todas las celebraciones tienen algo en común? Todas comenzaron con alguien que tuvo el coraje de decir, sí puedo.
Puedo devolverle lo que ha hecho por mí.
Puedo ahorrar para darle a mi familia un futuro brillante.
Yo puedo convertir mi nueva casa en un hogar.
Yo puedo convertir un final en un nuevo comienzo.
Y hacer que mi negocio siga creciendo. ¿Y estás listo para decir sí puedo?
Con Oriental, estás más que listo.
Iconic brands speak for themselves. The strongest brands stand the test of time. We are so excited to welcome you to our community. Today is all about you.
We've never lost sight of what we're trying to do and deliver that mission.
Going through this experience with my partners and my families has been unbelievable.
We imagined something that didn't exist yet, and we believed that we could do it.
You're going to look back on this accomplishment as one of the finest you've ever done.
I want you to know that the best is yet to come.
Just a few minutes, we'll go downstairs to the legendary New York Stock Exchange trading floor to ring the opening bell. The history here, the tradition, it's just incredible.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Consumers shelled out a record $12.3 billion for Halloween candy, costumes, and decor last year. And while estimates have a slightly lower figure for this year, somewhere around $11.6 billion, Halloween is big business. If you live in the suburbs, you know what I'm talking about, because you're probably already familiar with some of these larger-than-life size decorations that have become the norm for this time of year. Well, my next guest runs a company that specializes in animatronic props that you might see in some of the commercial-level haunted houses that have also found their way into residential suburbia. Cliff Steinkamp, president and founder of All Scare, shared a short clip highlighting some of these creatures that his company has brought to life, and we'll take a look and then talk to Cliff about it on the other side.
Kevin, are you off your oinker? If the wolf doesn't eat us, Maggie will! I think you can take it.
All right, Cliff, pretty cool stuff. Just about a week away from Halloween. How can people turn to your company for this sort of vibe?
Well, we run pretty much everything through the website, allscare.com. For a number of years, it started out as just tinkering, but it became more of an obsession as a result of people wanting these characters and not being able to easily get them. So allscare.com would be the easiest way they can see what we offer and make decisions on what they would like to purchase.
Are you seeing more demand, both on the commercial and residential level, for these types of props?
Well, we are, and I think you probably see it as well. You can now pretty much, you can't get into Home Depot or Lowe's or any of the other major stores without walking through their aisles of animatronic characters. Now, although most of those are of the lower end and really simpler in mechanical nature, that's a sign right there that there's a want for this sort of thing. Again, we've separated ourselves from those folks by means of offering a higher quality, a more industrial type product, which will stand the test of time.
Cliff, I am now in the mood for Halloween. Can I just say that? And I've been perusing, I should say, the website. A lot of great options there. Cliff, thank you so much for joining. Maybe you can come back next week as well as we get a little bit closer to the Halloween holiday. That's Cliff Steinkamp. He is of All Scare. Great segment heading to the weekend. Great to have you. All right, everyone. Well, certainly a busy show on tap today, from the markets, IPO coverage, OFG coverage, of course, that Puerto Rican bank, and stocks fractionally higher as we look to round out this show. Remember, you can always watch us at tv.nysc.com and stream us on YouTube and on the Cheddar channel. For Kristen Scholler here in studio, Trinity Chavez down on the trading floor, and the rest of the NYSE TV team, thank you for watching.
In life, I'm reminded that it's not about the destination, it is truly about the journey.
pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.